The Magnificent Seven seeing nice gains following Q4 earnings, with the group now up about 9% for the year. My next guest says while the names are richly priced, only one is, quote, priced to the point of insanity. Let's bring in the Dean of Valuation, Aswath Damodaran.
Hi everyone, JJ here with The Art of Value. Welcome. Well, today I'm going to react to a short interview with Aswath Damodaran. He said that in a previous interview, and here he's defending it 3 weeks later after the stock has gone up a lot more, and others, of course, are saying that it's not overpriced. So let's get into what he says in this particular interview.
Welcome back. It's good to see you again.
Thanks for having me back, Scott.
No, here we are. I mean, the market's up nicely yet again. So I'll ask you to answer the question I posed in the intro. What do you think now?
I mean, if it was overvalued a month ago, it can't be undervalued now. That would be a reversal of philosophy that would upend everything I think about value. But that said, though, I mean, even a month ago, I said only one of the stocks looked significantly overvalued, which is Nvidia. And it's actually the stock that's gone up the most. So that can be taken as an indication that I either have no idea what I'm talking about, or the market's doing things that I just don't understand.
He doesn't look particularly happy to be on this program, but, you know, it's a credit to him that he's willing to be there, because obviously, you know, when stocks go up like this, and he said that it's been insanely overvalued. He said that last time, it was just 3 weeks ago, so he's coming back here. There's a follow-up, and, you know, they're basically saying, well, what's the deal here? That, you know, as they do, the stock's still going up, but, you know, in these times when it's exuberant, that's what happens.
I mean, far be it from me to debate somebody who knows valuation and better than anybody, but maybe the valuation wasn't as overstretched as you thought about a month ago. Maybe we're not looking at things, maybe we're looking at things in a way that we used to, but now you can't, because we're having a hard time assessing what AI is really going to mean to some of these companies. And I bring that up noting that when you were last on, Nvidia was at 682. Now it's pushing 800. I asked Stacy Rasgon of Bernstein. He's one of the best analysts around. What's up with Nvidia and the valuation? I want you to listen to what he told me, and I'd love your reaction on the other side.
Okay, when he says one of the best analysts around, we can see that his success rate is 67% on tip ranks, which is in a 23.3% return. So, but it's only for the past year, and as we know, these stocks have gone up for, you know, very well over the past year. I don't know what his record's like over the long term, but he's ranked 215 out of 8,763 Wall Street analysts.
Nvidia is still not expensive. It's actually still the cheapest of all of the AI stocks. It's way cheaper than AMD. It's cheaper than Marvell. It's even cheaper than Intel at this point, right? So I still think there is room for expectations to continue to go up. I think so.
I mean, this was right before they reported earnings, and it was another blockbuster. So how should we view this now?
Damning with faint praise, right? That's like saying, yeah, I'm short relative to a typical NBA player. I mean, when you make pricing statements against a subgroup of stocks, in this case AI stocks, and say it's the cheapest of the AI stocks, that might very well be true, but they might all be overvalued. I think at the moment, the fact that I think we have to accept is AI is real. It's going to make a real difference to business. And I think NVIDIA is in the front seat of that market. That said, though, that pathway is not as easy and as open to profits as the market seems to be assuming it is. I mean, right now, NVIDIA is in a strange place, if you ask me. It's a great trade, but not a very good investment.
So he says Nvidia is a great trade, but not a very good investment right now. We've seen that in history before, where, you know, momentum is with stocks that go up a huge amount, especially in bubbles like the Dotcom bubble was like that. Great trade on the way up, but then it all comes to an end. And he's saying not a very good investment. So if you'd invested in Microsoft or Amazon near the top of that bubble or on the way up even, after it crashed, it took a long time. Amazon took 10 years, about a decade to get back to where it was, and Microsoft took it a lot longer. So he's not saying this here, but I think that's what he means, that you can have a great trade on the way up with these things with momentum, but when it runs out, it can all go horribly wrong and be a bad investment over the long term after people stop being so excited about it and the earnings slow down. Now, if you're getting value out of this episode so far and you think that I'm earning it, please remember to hit that like button to help the algorithm to spread it to more people, because that's what we want. Thanks.
I mean, trading is about mood and momentum. And if you think about mood and momentum, I don't think I've ever seen a company celebrated as much as NVIDIA. Jensen Huang is the greatest CEO ever walked the face of the earth, and this company cannot be stopped. At least that's a perception. And at least in the near term, how do you stop that perception from driving prices up? But the problem with mood and momentum is everything at some point in time, the fever breaks. And the question is when that'll happen for NVIDIA. It'll still be a great company, but I think the pricing is a little bit out of control on the company.
Now, this is an interesting point here because we can look back in history again and see, a company that's been talked about recently like this and compared to NVIDIA is Cisco. Now, I saw this article a few days ago, which was actually written in May last year, 2023, by Barry Ritholtz from Ritholtz Wealth Management. He's comparing it to Cisco systems during the dot-com bubble, which is an interesting comparison, I think. Not the same because the dot-com bubble was different. It's different this time. Yes, it is in a number of ways, but there are some interesting comparisons here. He says, no matter how much you cut it, you've got to own Cisco. Now, this article includes a segment 23 years ago today. Fortune magazine's cover story about networking gear maker Cisco was published, and that was about the internet, building the internet at that point, that long ago. So it was the company at the center of that, the hardware that goes into building the internet. So very important, similar to the hardware, right, of building AI today. That's the similarity there. So the cover asks two questions. Is John Chambers the best CEO on earth? And is it too late to buy his stock? So that was the commentary back then, and a similar commentary to NVIDIA right now, that nothing can go wrong. The best CEO on the planet, and earnings will just grow to infinity. So Aswath Damodaran's implying here, although he doesn't say it, that it's kind of like that it's priced to insanity, way overpriced, although he has to front up on camera and seem foolish because the stocks keeps going up, is what happens in every bubble. Now, over at the Art of Value Patreon, I've just posted a list of 6 stocks that I'm currently researching, and also my current portfolio. That's the kind of thing I post over there. Exclusive content, ad-free content, of course, just for the price of about a cup of coffee each month. You could just join for a month if you want to and see how it goes. So I'll put a link in the description if you're interested in checking that out, and I'll see you over there.
This surprises me in the sense that I feel like I could almost make the argument the exact reverse of what you said, that it's actually a great investment. Why bother trying to trade around? I've had people come on my other program and say, well, I took 20% off my Nvidia holding because this is unbelievable. Well, now the stock has elevated a lot. So how are you going to get back in now?
Okay, that was Josh Brown, downtown Josh Brown, who talked about that on a previous interview, that he has owned Nvidia for a long time and took 20% of it off the table because he thought it was insanely overpriced as well. It's getting ridiculous. And having said that, Damodaran actually owns Nvidia. He's owned it for a long time, so he's not saying it's a bad company at all. He's just saying that it's getting overpriced, getting ridiculous in the price.
Proven to be an unbelievable investment for those, and by the way, I think you're one of them, who got in really early and has been riding that wave ever since. You're not a trader, you're an investor.
And I'm glad I got in when I did. But the question to ask now, if you're an investor, is if I get in now, what am I pricing in? I mean, if you back out from the pricing, the $2 trillion market cap, what NVIDIA has to do break even, it's got to add about $400 billion in revenues. It's got to add 400 billion revenues to what it has as revenues right now. That's a daunting task. It's plausible, but if investing is about the game of the probable and you play the plausible game, you're setting yourself up to lose. Near term, they will beat their revenue and earnings targets because there are, all engines are firing at full force right now. So I wouldn't be surprised if on the next earnings report, they took their earnings expectations and beat them again, which is what pricing is all about. That's why I said it's a good trade. Is in the near term, they're more likely to deliver upside surprises. But in the long term, when you price the company to be the best company ever, where is the upside?
So again, what he's saying here reminds me of Microsoft during the dot-com bubble, when I think it was worth $600 billion the price got to then, and as well as those other companies like Cisco. There are a bunch of companies that got egregiously priced. I mean, it's not a direct comparison to them because it is different, but this could have further to run. Stanley Druckenmiller is also an investor in it, and he said 10 months into this, since ChatGPT came out, these things can go on for 2 to 3 years or more, not just 10 months. At the time I made a video about that. I'll put that in the description if you want to go and have a look at that. It's got an interview with him where he's saying exactly that, explaining why He's invested in it, and Aswath Damodaran is also invested in it. He's just saying it's overly priced, and Druckenmiller said the same thing. Other great investors are saying the same thing. It's a good company, a great company, but great companies can be bad investments at the wrong price. That's all that he's saying here, and we'll have to wait and see if that plays out. He's saying that the next earnings might be good and the one after that, but then people will come to their senses when that comes to an end. He's talking about competitors coming in or being unable to sustain this kind of growth with $400 billion upside that they'll have to have in earnings. You know, where's the end? Where's the peak? We'll have to wait and see. So let me know what you think. Do you think Damodaran's right here that Nvidia is insanely overpriced and then it's going to come crashing down? And when do you think that might be? If you do think that, let me know in the comments. I'd be really interested to hear what you think about this. It is a hot topic and a hot stock, obviously. Now, if you happen to be watching this on YouTube here, I'm going to put a link to that video that I talked about of Stanley Druckenmiller, his thoughts on Nvidia and why he owns it and how long he thinks it's going to run. And here I'm going to put a link to the video that YouTube thinks that you in particular should watch next. So go and see either of those now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.